Yo, I ain't here for the money, I ain't here for the fame. Though it might be nice to own a jet plane, I'ma do it all for you.
Traders, firstly, recap of today's trading session. Equities closed slightly lower today, giving back some of the gains from Friday's surge that had led to a 2% increase for the S&P 500 last week. The European markets also experienced a decline, while Asian markets, including Japan's Nikkei index, showed more resilience, reaching its highest level in over 3 decades. The weakness in small-cap stocks was notable, and bond yields remained relatively unchanged throughout the day. The latest ISM Services and factory orders reports, which came in weaker than expected, dampened some of the enthusiasm surrounding the economic outlook. Despite last week's strong jobs report, there is still a level of caution in the market. The focus has shifted to the relationship between inflation, economic activity, and the implications for future Federal Reserve decisions. Spotlight on the Fed. The release of the May jobs report on Friday provided hope for the economy, showing a robust labor market. The healthy payroll additions combined with slowing wage growth were viewed positively, as it is believed that slowing wages could help alleviate inflation pressures. Additionally, the combination of job growth and low unemployment provides some resilience to household spending. The upcoming inflation report in the Federal Reserve's meeting, where they will announce their latest interest rate decision, are now in focus. It is still expected that the Fed may take a pause on rate hikes in June, but the possibility of another hike in June or sometime during the summer cannot be ruled out. The Fed is aiming to strike a delicate balance of effectively addressing inflation concerns while avoiding excessive tightening on an economy that is showing signs of moderation. Recent market performance. Equities have shown solid gains so far this year, with the S&P 500 delivering a return of around 12%. International stocks have outperformed U.S. equities since the lows experienced in October of the previous year. Growth-style investments, particularly in technology stocks, have been the primary drivers of these recent gains, as reflected in the significant increase of 27% in the Nasdaq index this year. However, small-cap stocks have lagged behind in 2023 due to concerns about a slowing economy, which have been a headwind for more cyclically oriented investments. In the bond market, there has been a moderate rebound this year after the rout witnessed last year. Retreating interest rates have contributed to the increase in bond prices, resulting in modest gains for both investment-grade and high-yield bonds. Watchlist. The focus of the watchlist is on the oil situation, particularly the companies OXY and XOM, as well as the energy sector as a whole. Oil prices rose today following Saudi Arabia's announcement on Sunday to cut oil production by 1 million barrels per day in July. The market will be closely monitoring how this situation unfolds and its impact on energy. The decision by Saudi Arabia to cut oil production by 1 million barrels per day in July sent a clear message to speculators and helped hold down recent oil prices. The meeting of the Organization of the Petroleum Exporting Countries and its allies, including Russia, OPEC+, officially agreed to extend current production levels through 2024. This move means larger production quotas for some OPEC members, particularly the United Arab Emirates. However, weaker than expected demand from China and excess production by Russia have kept crude oil prices near 52-week lows. Saudi Arabia's output cut, initially planned for 1 month only, adds to the previously announced production reductions that will now be extended until the end of 2024. The pre-weekend OPEC+ meeting hinted at a possible production cut in response to short sellers, and the market reacted positively to the news, with oil and energy stocks leading the way in pre-market trading. The energy giants Chevron and ExxonMobil experienced early gains before dropping. U.S. crude oil prices rose by 2.4% to $73.47 per barrel, while Brent crude futures advanced by 3% to around $79 per barrel. The developments in the oil market, especially the actions of major players like Saudi Arabia and Russia, will continue to be closely watched as they have significant implications for the energy sector. In addition to our ongoing watchlist, which includes monitoring the performance of GameStop, GME, we are now adding 2 Chinese giants to our radar: Alibaba Group Holding, BABA, and Baidu. Alibaba has recently announced the integration of its ChatGPT-like Tongji Qianwen into its service offerings, such as the meeting assistant Tingwu and the collaboration platform DingTalk. This move aligns with the broader trend of Chinese technology firms promoting their own versions of generative AI. Tongji Tingwu, the updated meeting assistant, aims to enhance comprehension, facilitate the sharing of multimedia content, and provide more accurate summarization of audio and video materials. DingTalk, on the other hand, will soon introduce similar AI functionality, leveraging the capabilities of Tongji Tingwu across a wider range of productivity-focused products and services. Meanwhile, Baidu, in a recent speech by CEO Robin Li at the AI-focused Zhongguancun Forum, expressed its commitment to leveraging AI to transform all of its products. Li emphasized the need for reworking and restructuring, rather than mere integration or access, to fully harness the potential of AI technology. This renewed focus on AI by both Alibaba and Baidu reflects the current AI frenzy in China, with various domestic tech companies showcasing their strengths in this field. The competition between these industry leaders, as well as other players like SenseTime and iFlyTech, has intensified since the launch of Microsoft-backed OpenAI's ChatGPT, which triggered a flurry of similar chatbot releases. As these developments unfold, the market will closely monitor the performance of GameStop, the integration of AI technology by Alibaba and Baidu, and the broader implications for the AI landscape. This dynamic environment presents both opportunities and challenges, and investors will need to stay informed about the evolving AI trends and the potential impact on these companies and the market as a whole. Thank you for watching our update. We appreciate your support, so please consider subscribing to our channel and liking this video. Your engagement is invaluable in helping us continue to produce time-consuming content like this. However, it is important to note that none of the information provided in this video should be considered financial advice. We strive to provide informative content, but it is always recommended to consult with a qualified financial professional before making any investment decisions.